So if you're watching this video, you may have been doing some research on exactly what a net worth statement is and what the importance of a net worth balance or a balance sheet is. And today we're going to talk about that, and I'm going to go over all the details with you so that you can find out how this fits into your goal and your journey for freedom and passive income. Hello, this is Ronette, your financial fitness coach and wealth building consultant with Freedom and Passive Income. And if you're new to the channel, I would love for you to subscribe and hit the notification bell so that you can get the latest tips, strategies, and information to support your desire to dream, believe, and achieve freedom and passive income. And if you want to go ahead and get a jump start on creating your passive income, if you check the description below, you can get my free ebook and video series training on the 3 steps to success with affiliate marketing. So today we're going to talk about your net worth and why it's so important. And I want to clarify, I just want to share the fact that passive income is the end goal. And you want to begin with the end in mind. And so why is passive income so important? Passive income is important because it allows you to continue to live the lifestyle that you're used to by doing one thing, whether it's one investment or one business activity, and that one action, that one investment enables you to get paid over and over and over again. So a lot of people focus on their cash flow, which is important because your cash flow is like the lifeblood of your finances, but you ultimately want to look at your net worth, and your net worth is determined by what you're saving and investing. And so I want to, I'm in the tool that I use, and I just have some examples here. These are not real amounts, but I just have some examples here of what would be in your balance sheet, which would show you what your net worth is. And I've titled this document Net Worth Statement. And so your net worth is the difference between your assets and your liabilities. And your assets are the things that you own. And so if you can see this here, you're looking at things that have value, have a tangible value. I apologize. Turn that heater off so that doesn't disturb us. So anyway, your assets are things that have value. And so as you see here, you're talking about your cash equivalents like your checking account, your savings account, money market funds, certificates of deposits. Those are all your cash equivalents. You also have your investments, which would include stocks, bonds, mutual funds, partnership interests, and your business. In this particular situation, I have a business with my econ. And you also have your retirement funds, in personal assets. Most people, their biggest asset is their home. And so you've got your principal residence. If you have a secondary residence, then it will be the value. And the values that you will put into these fields would be what I would call the market value. Like, what would you be able to sell these assets for? It's pretty easy with your cash equivalents. Basically, whatever the balance is, that's what you can rely on, that particular amount. With your investments, your stocks and bonds, that's going to be pretty much whatever the market demand is for those items. And then with your retirement funds, it's the same thing. When it comes to your house, that is going to be determined by what you can actually sell your residence for. So there are a lot of resources online that you can find to look up the value of your house. A lot of people use Zillow, or you can contact a real estate agent and they can give you an informal appraisal. But I wanted to clarify that with this particular part of your asset class in terms of your residence, that definitely can vary. It may, but you want to at least put an estimate in there, even if you don't know the exact amount that your home would sell for. You would at least want to put an estimate in there. And so of course you have collectibles, antiques, your automobile. Again, that's what you can actually sell your vehicle for. And so those are all of your assets. Those are all the things that you personally own, and they're attached value. So those are all your assets. So now we're going to talk about liabilities. Your liability is anything that you owe. So your charge account balances, so that's all of your credit cards, your personal loans, student loans, auto loans, if you're taking a loan against your 401k, your mortgage, this says investment loans, but that's, I guess that would that would include like your rental property. So if you have mortgages and that type of thing against your rental property, in terms of the real estate, then that would be a liability. Your home mortgage is a liability. And so you would add up all of those things, and then you would subtract that amount from your assets. So let's just go here. I'm just going to put some examples in here just so that you can see what this looks like and how this works. So let's say you've got, I'm just going to try to use some realistic examples. Say you have a $500 in your checking, $1,000 in your savings. Let's do all the money market accounts. Oops, excuse me, I didn't mean to do that. Hold on. I hit a button I wasn't supposed to hit. Go back here. Okay, so your money market accounts. And then, oh, if I hit the enter button, it's going to do that. I won't do that. I want you all to see how this works. Say another money market account, you have $1,000 in there. Let's say you have, let's say a $5,000 CD. U.S. Treasury bills, let's say you got $2,000 in there. Let's say you have a whole life insurance policy in there. It has a value to that. Let's say the value on that is $50,000. And I'm just going to put some amounts in here that I think could be realistic. Your pension, a lump sum value, let's put. And like I said, these are not real numbers. I just want to show you what how this tool could work for you. Principal residence. Let's say your home is worth $200,000. Most people don't have a second residence, so let's leave that out. Let's leave out the collectibles and antiques. Now, maybe you might have something, an heirloom for your grandmother or something like that. Let's put like $3,000 on that. Your automobile, home furnishings, furs and jewelry. Okay. So those are all your assets. So that's what you would do. So if you're trying to create your net worth statement, then you would just, put all of your assets. And the easiest way to do it would be to use some type of spreadsheet or some type of tool like this. And you can handwrite it, but then you have to add it up every time you do it. And the suggestion, I would suggest that when you're getting started that you do this like every quarter, and then that way you kind of keep a close eye on how you're doing. And then after you've done it for a while and you're making the progress that you want to make, maybe you could change that to be every 6 months or so. So if you're okay with writing it all out and then adding it up every time, you can do that. But of course, in real life example, you're not going to have these round numbers. You're going to have some odd numbers. So if you want to be accurate, you're probably going to want to use some type of spreadsheet or some type of tool like this where you can just change. You can change each field, or maybe just change a couple of fields if they have not all changed, and that way it calculates it for you. Okay, so then we're going to put in personal loans. So charge account balances. Let's say, I think the average they say Americans have is like $10,000 in credit card debt, I think. Okay. Personal loans, let's say 5,000. Student loans. Nowadays, I think that I've heard the average is like in the 20s or the 30s. Let's say $25,000 for student loans. auto loan. Let's say you owe $10,000 on your auto loan. 401k. Let me put some random amount here. I don't think we counted a second residence, so I won't put a mortgage or a real estate loan for that. Your home mortgage, let's say you owe $175,000 on your mortgage. Okay. So based off of this, based off of all the figures, so I entered in all of the assets. These are all the things that you personally own, you have ownership of, and these are all the things that you owe. You owe money to other people. You're making payments, or you know that you have to make some type of lump sum or balloon payment in the future. So now we're going to save changes, and it should give me a balance Okay, so this is a balance sheet. This is your net worth statement. You see all the assets are listed. Those are all. So we've got $418,500 in assets, and then you have liabilities of $190,000. I'm sorry, liabilities of $228,000. Your net worth is right here. Your net worth is right here. Is $190,500. So basically your net worth is if you took all of your assets and you sold them and you paid out, and then you took that money, you paid off all of your liabilities, everyone that you owe, you will be left with $190,500. Most people today have a negative net worth because their assets, the things that they own, they truly own, exceed or is less than what they owe, and a lot of people have. So that's why you don't want to, constantly refinance your home. A lot of people, I would say a few years ago when the real estate market was really booming, a lot of people were refinancing their home and they were taking the equity out, and then they were spending the money on things that were not appreciating in value. And that's the other thing with your assets. Your ultimate goal is to not just have assets that have a value. You want to purchase income producing assets. Those 4 asset classes would be real estate, stocks and bonds, some type of business, and precious metals. Now, precious metals do not generate an income, but precious metals basically provide a hedge of protection around your other assets and protects you from a lot of the risks of inflation. And I know here in the United States we really don't have a lot of experience with hyperinflation, but if you go on YouTube, you can see that people in Venezuela, as we speak, their money is not valued very highly, and so they can barely eat. Like, people are, what they're earning, averages out to be like $10 a month in US dollars, and that's what they're making for an entire month, and that's because their currency has very little, if any, value at all. But the people that have precious metals, the value of those precious metals is keeping up with the rampant inflation there. And there are stories about people that dive in the sewers on a regular basis trying to find gold chains or rings or anything like that someone may have dropped down the drain, in their in their home or apartment or anything like that. And so those people, they can take the gold or the silver that they find, they could take it to a dealer and cash it out for the currency, and then they can eat. So when you already have precious metals as part of your portfolio, it kind of gives you a hedge of protection around your other assets if in case your other assets lose their value because something happens with the currency. And like I said, here in the United States, we're a bit spoiled because our generation, unless you grew up like in the 70s, I'm telling my age, but I remember the 70s. I remember people talking about inflation, but I don't remember it ever being hyperinflation like what they're dealing with in Venezuela. And so precious metals are not talked about very often in terms of in terms of being assets, but people that are wealthy and people that understand how money works, they have precious metals as a part of their portfolio. So I just wanted to add that when your ultimate goal in terms of establishing a passive income and freedom, financial freedom and independence through passive income, you're wanting to generate your cash flow and then take that cash flow and reinvest it into income producing assets. So that's going to be a business, real estate, or stocks and bonds. And so over time, the goal is so that over time those assets produce an income for you that you can live on and not necessarily have to work every day. So I hope that this gave you some clarity on your net worth and the importance of your net worth. You definitely want to generate as much cash flow as possible, but understand that if you're spending as much as you're earning, you're not building your net worth. And so there are tons of stories about people that have earned millions of dollars and they're broke because every dollar that they earned, they spent it. And so it's really important that you do a net worth statement, even if it's negative, even if your net worth statement is negative, at least you have a good snapshot. At least you have an understanding about where you are, and then you can go from there. And then as that negative balance gets smaller and smaller, then you turn that into a positive balance and you just keep building up on that. And so again, I hope that this was helpful. If you enjoyed this information, if you feel like it was value to you, if you could please hit the like button. I really appreciate your support of the channel. And again, if you haven't subscribed, and hit the notification bell so that you can get other videos and tips and tricks about building your passive income and your financial health. All the best to your success, and I will see you in the next video.